Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is a Forex Kickstart video where I take a look at some of the major U.S. currency pairs, focus on the euro versus U.S. dollar, dollar versus yen, sterling versus U.S. dollar. All from a technical perspective. We do have some fundamental news coming out later today with the U.S. Federal Reserve scheduled to announce a rate cut of 25 basis points. It's priced into the market. Nevertheless, we are seeing some dollar selling and trading today after yesterday's sharp rise after the U.S. elections sent yields higher. Today we are seeing yields lower. The 10-year yield is currently down minus 2.4 basis points. The 2-year yield is down minus 4.4 basis points. But as I mentioned, the yields did move sharply to the upside yesterday. So this is just a little bit of a correction as the markets, kind of ponder what the Trump administration means for U.S. debt. It doesn't mean larger deficits, doesn't mean a faster economy. Both of those would lead to higher rates, hence the move to the upside. But we'll see how long that persists. And let's get started. Look at the hourly chart of the euro versus U.S. dollar. Just in the short term, we did have this floor here established before the elections and in trading yesterday. We saw volatility up and down. But this rise right here did move above the high of that floor briefly and then rotated to the downside. We came back up toward the low of that floor and trading toward the end of the day and fell off. And trading here today, you can see the price moved into that level and backed off again. But in the early hours of the U.S. session, we've seen the price move above this old floor area up above 1.0776. And that's given the short-term buyers a little bit of hope and more confidence that we may see further corrective moves to the upside. The next target comes near the 1.0810 level. That level corresponds with this low going back here, and the other, you can sort of see low here, fell below that level. Use that level as resistance through here, and use it level as support. You can see how it sort of moved above and below the area before breaking to the downside and trading yesterday. So I consider that level a level of importance. Also, over here we have this blue line and this green line. Both of them represent the hourly moving averages. The blue line represents the 100-hour moving average. The green line represents the 200-hour moving average, and both of those are converged at 1.0835. So the progression, if we're able to stay above this swing area, if we move back below it, the bias moves back to the downside. But staying above this swing area would have traders looking toward 108.10, then 108.38. Where the two moving averages come into play, and that should be a tough level to crack on the first look. Let's take a look at the dollar versus yen next, and again, we'll look at the hourly chart. And what we saw on the hourly chart is that the price moved into this swing area. I'm going to go to the 4-hour chart initially and take a look at this area right through here. You see this yellow area. This yellow area is defined by different swing lows and swing highs through this area. Yes, we moved above and below it at times, but we based against the level, moved higher here. And then when we came back down, we tried to hold support against this area here and found resistant sellers, and finally resistant sellers right here, which was priced to the downside. So returning back into this area between 1.54 and 155.09. It's pretty wide, but so are the ranges in the dollar versus yen of late. We did find sellers in there, and we rotated back down. We do have this other swing area through here, which encompasses different swing highs. You can see it better on the hourly chart. I'll show you now. This area right through here, where swing high, broke up, volatility yesterday, but based against the level and trading here today, we started to come back down and use that level as initial support, now breaking below it. Also in play is a 61.8% retracement. That's of a longer-term move to the downside in the dollar versus yen, not shown here. But believe me, that's a level. If we get below that level, then we start to look also toward the converged 100 and 200-hour moving averages. So in the euro, we had converged 100, 200-hour moving averages. In the dollar versus yen, we have converged 100 and 200-hour moving averages. It's going to be, like the euro, a tough nut to crack. We did try to hold resistance against the 100-hour moving average here, held it against the 100 and 200-hour moving average here, and then broke above both of those levels with momentum here in trading yesterday. So this is going to be a tough level on further selling. But we first need to get below the 61.8% retracement of 153.39 to be aware, be prepared. If we hold that level and move back above 153.88, then this is just a small correction in what has been a restart of the move to the upside in the dollar versus yen. So also be aware of that. Let's finally take a look at the Sterling versus US dollar, the Bank of England did cut rates by 25 basis points, signaled room for further, but the sterling versus US dollar is moving to the upside here. Nevertheless, and we're heading into this cluster of moving averages. This cluster of moving averages is defined by the 100-day moving average up here, the 100-hour moving average down here, and in between we have the 200-hour moving average and the 100-bar moving average on the 4-hour chart. This area right here between 129.41 and 129.88, if broken on the top side, would shift the bias more to the upside for this pair. It basically is a result of this up and down volatility that we've seen with a sideways flow. All these moving averages caught up with the price, and as a result of the sideways up and down action. And so getting above those levels would be more bullish. Staying below would keep the bears more in control, at least in the short term. We would need to get below this swing area on the downside between 128.44 and 128.71 to increase the bearish bias. Taking a look at the 4-hour chart to see where that comes from. It comes from about back here. We had swing highs, swing lows through here, swing highs through here, swing highs before breaking to the upside, came back down toward that level right here. And found support last week and trading yesterday off of the volatility. We moved a little bit below that level, but then reversed higher. By the way, the 200-day moving average, with all those moving averages up here, the 200-day moving average is down here. So if we do reverse lower from this area and start to move back below the 50% retracement, start to move back below the swing area, that 200-day moving average is going to come in play. So there you have it. Look at 3 of the major currency pairs to kickstart your trading day. My name is Greg Mikulowski. Good fortune to trading. Bye-bye now.